a new platform, Elise AI. I don't know if you've heard of that. We're actually in the process of transitioning from Appfolia to that, just because I think there's so much more forward thinking on the AI side. So just trying to stay ahead of the curve and make sure speed to lead and our response rates to residences and just how efficient we handle all open items is always top of mind, so that our residents who are our customers, we're giving them the best white glove experience possible.
Welcome, Real Estate Hustlers Podcast. I'm your host, Josh Appelman. Today we're joined with Justin Spillers, co-founder of Real Estate Alpha, oversees 700 plus units and delivers tax advantage fixed returns to investors through a scalable multifamily investment strategy. Justin, we appreciate you coming on the show today. If you could let the listeners know a little bit more about yourself.
Yeah, and thanks, Josh. I appreciate that. Happy to be here. Yeah, you spot on. I started as a real estate attorney by trade, practiced law for about 7 years. Pivoted into entrepreneurship in 2016, bought my first property, started a couple other businesses the last 10 years, been growing those businesses. I've sold out of everything except for the multifamily real estate business. And me and my business partner, Brandon, we're all in on that. And things are just growing like crazy. And in that fun spot where we're just building the team and training the people to grow.
And you all are vertically integrated. So you're doing asset management, you're doing acquisitions, property management, the whole piece, correct?
We do it all in-house. That's right. Yes.
Yeah, perfect. So let's go all the way back to the beginning. Your first real estate property, your purchase, what it looked like and how you got it and what happened.
Yeah. So when I practiced, I had a lot of clients that were real estate investors and then a lot of business owners that invested passively in real estate. So got a lot of experience at over 7 years practicing, saw it from afar, but never did it myself. So read all the traditional books, Rich Dad, Poor Dad, etc. Got into bigger pockets and finally decided I wanted to buy my first investment property. I went out and looked at, felt like 100, was probably 20, but constantly walking through properties. And me and my business partner found our first one. It was actually a 7-unit in Piqua, Ohio, $110,000, which I thought was the most expensive thing ever. And really liked it, put an offer in, we're able to buy it. And that was our first purchase and haven't looked back since.
So you purchased it. Did you all renovate it? Was it fully occupied? What was the status of the property?
Yeah, it was cash flow and it was occupied. We did renovate it. I didn't even know what value add meant back then, but found out very quickly. I had a boiler, had lead-based paint. We instantly got a citation from the city for all sorts of code violations, sidewalk issues, etc. So first one, ripped the Band-Aid off, learned absolutely everything you possibly could, but we improved each of the units, did some light value add and increased rents slowly but surely, and really looked at it as a cash flowing property more than anything, and it worked really well. It was a great learning curve and learned a lot from that first one.
Got it. That was a confidence booster getting into it, learning the lingo and the pitfalls. Tell us about your next one that was maybe of size, a bigger property.
Yeah, so we've had the foot on the gas pretty much the whole time. We started buying a bunch of single family duplexes, quads, etc. On the smaller side, worked our way up. We bought a 16 unit within that first year, and then had a lot of success on those. We're able to refinance some of the duplexes pretty quickly, aggregate our cash, and we bought a 48 unit in those first couple of years. And that 48 unit was real eye-opening for a lot of perspective. The big one just being how to scale a team, how to do things at a much higher level than just onesie twosies, and really think of it more like a business operation than just a passive investment vehicle. And did really well in that 48 unit, did a lot of value adds, scaled it quickly. We're able to exit it extremely fast in less than, extremely fast to us back then, in about 2.5 years. Had a massive return, and that really is the catalyst to really make us understand that this was the whale of the businesses we were involved that we're going to swallow the rest. This was our best earning opportunity vehicle, and to go all in on just residential multifamily value add.
Yeah, I think a lot of people quit between the thought of I want to get into multifamily and what the amount of time it takes to get their first purchase, which could lead to months into years, because you really don't know what you don't know, and finding that first deal is the hardest one. And then they start to lose faith in real estate when they find out there's really no money in real estate until you start making the little bit of money along the way, and you finally have an exit of some sort or a full cycle. What kind of, I call it brain damage because there is a ton of brain damage that goes along into it, but what kind of emotional distress did you put yourself under going through the ropes?
Yeah, so it's funny that that's probably the one thing I get asked a lot. What do you wish you would have known in hindsight? And the big one is that you have to get your teeth kicked in, right? You have to hit rock bottom. You have to have your back against the wall. You have to pay down your ignorance debt. You have to go through all those bad things. You think it's the worst thing ever. You get a fair housing claim or an eviction that gets fought and a judge rules against you, or you get threatening letters from a tenant or whatever it might be, right? You think one of your roofs just got massive hail damage. It always seems like the worst thing ever in the moment. And all those small things stacked up in totality as being an entrepreneur, business owner, that's the hard part, right? That's where you learn. That's where you grow. That's where you really have that evolution and really understanding what it takes to be successful. And I truly believe you got to pay that ignorance debt down. Alex Ramosi is a great quote. If you want to make $100 million, you got to go through $100 million of pain. And that's exactly right. So a lot of those small things, when you think it's the worst thing ever, in hindsight, I wish I would have known that's just part of the process. I've never met any successful entrepreneurs that haven't gone through that, haven't had the tough times, haven't had the challenging moments, haven't had the setbacks, what they perceive as bad luck, right? It's just part of the process. So happens to everybody. I had a lot of them in the early years, and it was a necessary evil. And it just sharpens you, makes you better, makes you more agile, versatile. And just you build up that tool set that makes you invaluable. Now, fast forward 10 years later, the things we're able to do now it's incredible. So it's just really cool evolution of learning and experience by having those setbacks.
Yeah, no, that's huge. That you just put it in perspective of everything it does take, and it takes time. More than anything, it's just patience and persistence, just showing up every day and getting involved. You all. I believe you all find a lot of your all's assets you purchase off market. Is that correct?
Yeah, pretty much most of what we do is off market. We have a massive underwriting team, what we call it the acquisitions team, and we're just looking for needle in a haystack. So we built out an entire system. There's about 20,000 multifamily properties in Ohio. Of that, about 4,000 fit my buy box. We just hammer those 4,000 as much as we can direct to sellers, but it's very hard to get a seller to sell without working with the broker. They just want that confidence booster that someone else is rubber stamping that the purchase price is good. They're not getting taken advantage of. So we've even had deals where we've gone direct to seller. They go out and get a broker just to validate the price we already gave them and pay them the commission just to feel better about it, which I fully understand. A lot of times the mom and pop owner, out of state owner, someone that's maybe the biggest thing they ever sell. They just want to make sure they're not leaving money on the table. So what a lot we do is direct to seller. With some deals, what's more common is we work with brokers direct to sellers, and we try to stay in front of the brokers and have a really good reputation and rapport so that when they get those deals, they think of us first, they call us first, and we try to lock it up before they even have to put the offering memorandum and push it out to the marketplace.
Yeah, relationships is huge. I mean, even getting off-market deals direct from brokers, because that's a big play as well. A lot of brokers, they don't broadcast the deals unless you're on their preferred buyers list, and preferred meaning that you've transacted with them before. You've proved that you can close. It's not a bunch of just monkey business back and forth. But that's the relationship piece. That's where you can truly find it. It might not necessarily be a good deal today, but if you underwrite it, you kind of see where things are going. Great area, you know where it can go, and you buy for today cash flow and what the value could be. And I know you all do not purchase based on pro forma, right?
Yeah, so we're complete value add guys. I care about the rent increase potential more than the in-place cash flow. And now we're at a good spot where we have a lot of really good lender relationships. Our lenders don't care about what the in-place rents are, in-place DSC are. They're just looking at pro forma on the as repaired property after we get done with it.
Got it. Yeah, makes sense. A lot of one of the biggest questions I get is from guys wanting to get into real estate multifamily is how to build their team. So tell us how you built your team. Everyone starts with one, and then you get good people around you. So tell us how that went.
Yeah, so it's been kind of scrappily. We've done everything in-house. We've never really outsourced any part of our business. I'm fortunate my business partner was in construction and roofing and knew that lay of the land. It had been very tough for me to learn that myself without having to partner up with someone or outsource that component. So we've had a good separation of skill sets between the two of us. And it's just been one good hire at a time. So we hired that first maintenance guy, we hired the first accountant, we had the first leasing agent, and just slowly scaled as we increased our unit count. And now we're in a really good spot where we have 6 very clear business divisions: acquisition, leasing, property management, maintenance, construction, capital raising. I have a manager in place in most of the divisions, and the ones I don't, I'm currently actively hiring for now because me and Brandon still oversee it. We're trying to get ourselves out of the day-to-day so we can work on the business and not in it, to have that next layer of the org chart. But beneath it, we have a lot of really good virtual team members that do a lot of the support functions for our local team. So 3 people in the acquisition team. We have 4 leasing managers. We have 4 setters who are just contacting leads on the leasing side. 2 community managers that flex to all of our properties. 3 maintenance technicians that flex to all of our properties. They're rock stars. We've added 1 good one that's continued to train the next one, and they do an amazing job. And then our construction team is by far our biggest. We have 6 3-man crews. All we do is the turns inside, in-house directly, and building up that part of it's been kind of our secret sauce. So that's the local team. We have about 12 to 15 virtual team members that support all those different functions afar, mostly in the Philippines. But yeah, just slowly hiring one at a time as needed. But the biggest thing is we just ask ourselves, what's the constraint? What's the constraint to growth? And how do we hire for it to knock that down and move on to the next one? And I feel like we literally just go down the row. Acquisition is a constraint, we fix it. The next is leasing, we fix it. The next is property management to get the renewal rate up, we fix it. And it just reverts back to the beginning. And we're just constantly cycling through which business division is our constraint to growth.
Yeah. You guys, have you plugged in AI to help with the little in between?
Yeah, man. I went down a big rabbit hole with Claude Cowork yesterday. Actually, yeah, I got real deep into it. We use AI a lot. I mean, all of our team members, except for our virtual team members, I tell them, do not bring me a question without having read it through AI first and bringing me the best solution, because a lot of times it's 99% accurate. It's going to give the answer I'm going to give. There are like some functional, practical replies like, now our residents, right, are using AI. So I'll get a 2-page filled with M-dashes letter about all these things that made their unit inhabitable, right? And it'll just be one little issue of like, I want to turn the heat on, right? And so our team member will use AI for like a 2-page response when it's just, hey, don't do any of that. Just call them up and say, hey, we'll give you a deposit. You can move out tomorrow. Just call their bluff, right? Like a normal human being. Like, whoa, wait a minute. I don't want to get out. I don't mean all these things in my threat letter. I just want the heat turned on, whatever, right? And you get to it real fast. So like you still have that human element that AI misses and kind of adds some complexity. But as far as the automation side, we're doing a ton of automations. A lot of our KPIs, our metrics, our dashboards are all generated now by AI, just pulling in all the data and the reports that are being scheduled and ran on some sort of cadence. And that's just has saved our team a ton of manual work. We were building out our own custom metrics and KPIs. And that's actually what I was doing yesterday. I was feeding in all the data to see the next 12 months, how many turns we're going to have projected out at each property, and then totality in the whole property, layering in 2 new purchases, layering in what I think our renewal rate is, layering in what I think the cost is going to be. And it just spit it out instantly. Oh, yeah. And it's unbelievably accurate. And it's really good foresight for me because I could see the shortfall with our current team, how many turns we could do versus how many we're going to need, and see what kind of hiring we need. And that stuff would have took me days, if not weeks, with the team to build out. We're there.
Or if it would have been done at all. That's the big thing.
Yeah, exactly. I wouldn't have done it at all or just guessed, right? Where now I got real data and I built it myself in a couple of hours.
Yeah, I went deep into the OpenClaw when that first came out, really deep. Built it, it would break. Built it, it would break. And then it just got so expensive with APIs. And I was done. And then Claude Cowork came out. I want to say it's a little over a month now. It really came out. And man, I built a killer mission. I call it mission control. APIs are fed from AppFolio, and I mean, it just lights up your dashboard. Whatever KPIs, whatever dashboard, break even, occupancy, just all the things, and it just gives you another level of clarity. And then performance accounting. What do we need to do to get to here? What does this look like if we take away this? Is our payroll too high? Just all the things, and it's feeding directly from the data that everything's going into. So it's just massive what you can do when you have things that can build what you have in your head. And you're talking hundreds of thousands of dollars what it would cost for a CFO to come in and give this data, and then for a developer to build it, and you can build it within a couple of days. So it's amazing, and that's just the beginning. So what does AI look like a year from now? and so on and so forth. So what are your takes on what AI is going to be a year from now, 2 years from now?
Yeah, it's scary. It's coming fast. It's pretty cool. I don't want to be behind the curve, so we're trying to stay in front of it. The big thing though is, you, at least for the foreseeable future, you're always going to need people, right? There's going to need to be people to understand the data, still implement it, still make sure it's being handled correctly. Certainly, a lot of the manual, redundant tasks, some of the pick and shovel work will be automated for sure. I think we're going to have that level of people, though, at least in each of my business divisions, to understand the data, make sure they're manipulating it correctly, running it correctly. So I don't think that's going away in the next couple of years. But on the leasing side, I mean, we're just going to have smart properties, right? I mean, you're going to have an app where you can ask any question to it, where they're calling about questions about trash, or how do I do my cable, or what do I do here, or this person wants to report this. Like, all of that is going to be automated with an AI agentic voice bot that they can talk to in real time, text in real time. It's going to be a kiosk at the property. They can just walk up and ask it, like someone staffing the leasing office. Like, all of those things are for sure going to be automated, which is going to be pretty cool. The interesting part is going to be integrating it all. Like, we have a facial recognition system now to get into our shared common space apartments, that with the camera systems, and just how all of that's going to feed together and get smarter with data. And then in turn give us real-time data will be interesting. On the leasing side, I do think virtual showings is going to be huge, and you're going to do virtual AI-led walkthroughs. Is going to be most of the touring. And a lot of things are going to be more hands-off. You're still, I think, going to need the people to close them and answer those fine-tuning questions and hold their hand to the finish line. But I'm very bullish. I think AI is going to be a huge part of everything we do, from start to finish. So I'm trying to stay ahead of it. There's actually a new platform, Elise AI. I don't know if you've heard of that. We're actually in the process of transitioning from Appfolio to that, just because I think there's so much more forward thinking on the AI side. So just trying to stay ahead of the curve and make sure speed to lead and our response rates to residences, and just how efficient we handle all open items is always top of mind, so that our residents, who are our customers, we're giving them the best white glove experience possible.
Elise AI, that's a voice platform. It doesn't replace Appfolio completely, correct?
No, it does. They got a whole ledger
wow.
and everything they're rolling out now, so they could be a turnkey replacement.
Damn, all of the accounting features, everything.
Yep.
Wow, that's news. Okay, I'm gonna check it out, because that's the other piece is SaaS. In my opinion, is the most smoked. You have to have your foundational SaaS, but all of these companies that built software as a service that can now be built by the user in using their own data and their own tweaks is, I mean, there's going to be almost a bloodbath out there of companies that were spawned up solely around AI, and now these other platforms come in and take out them, like Claude Cowork. So I think there's disruption on the horizon, and then white collar, I think there's some disruption on the horizon for that class as well, which you'd have that more in your A class apartments. But we'll see. I mean, there's going to be a lot of changes fast, but as long as staying ahead and still integrating it, then should be safe. But where do you see your company going in the future? With you're at 700 now, so how big do you want to get it?
Yeah, and just jumping back on that, the important part of our business is the value add too, right? So the maintenance, construction, like that piece isn't going anywhere, right? Robots aren't going to be fixing toilets in the next 5 years or turning a unit in the future potentially, but very much bullish on our people there for sure. So a lot of the grunt work and the important stuff of actually adding real value through the CapEx plan, that's very much still there. So it's just how do we support that, do time studies, and track that better with AI. So very, very much a human element there. But long term, we've fully committed. We had the woman in the red dress syndrome, right? We had all different types of businesses doing different things, and we've since sold them all. We have 100% blinders on now. We take C-class properties and make them B+ as fast as possible in Ohio. That's all we do now. So very excited about the growth potential. We layered in the preferred equity fund to supplement our own capital, because me and Brandon pretty much have self-funded it to date. So we're adding in some private capital moving forward, where we bring half the capital and the fund brings the other half the capital for new purchases. So that's been a really good add-on, so we can grow faster. So we have 160 units under contract now, so we'll be at about 850, 860. I have 2 or 3 more deals we're chasing. I'm going to be at 1,000 apartments this year, and then I want to double every year thereafter. So we have some very ambitious growth targets, apartment count numbers. Probably stay in Ohio until we hit maybe 5,000 units and then start spreading into the neighboring states. We're already underwriting Southern Michigan, Eastern Indiana, Northern Kentucky, but very much have localized in the Toledo to Dayton market where our backyard is. So it's just a lot easier if our property's within 2 hours for our teams and our existing base. But as we grow in scale, we'll certainly have to go in other directions. But there's so many properties out there and so much opportunity. It's crazy. And I think there's only going to be a bigger and bigger wave of people exiting the real estate space, especially as they get behind on this tech stack and on the leasing, the property management, even be able to efficiently do their own construction in-house. So I think there's going to be a lot of opportunity and buying opportunities. So I'm very excited about the future.
I like it. Very cool. Justin, if somebody wants to get a hold of you, reach out, learn more about yourself, your firm, how can they get in touch?
Yeah, so if you search me Justin Spillers, Real Estate Alpha, you'll find my LinkedIn there has the best contacts for me, but my email, justin@realestatealpha.io. Reach out anytime. I love connecting with people in space, no matter what level, beginner, novice, expert, etc. I'm happy to connect, share anything I can, and give as much feedback and mentorship as I can.
Awesome, Justin. Definitely appreciate your time. Look forward to following you. Thank you.
Thanks a lot, Josh. Appreciate it.
Thanks.